Right. We are going to talk about the basics of taxes today. Very exciting. So make sure that you have your note-taking guide for the basics of taxes. And most of these blanks are going to be filled in right along with the slides. So here's your first couple. What are taxes? This is defined as a sum of money demanded by a government to support the government itself, as well as specific facilities or services. So, who are taxpayers? Anyone who pays a tax is a taxpayer. Chances are you are a taxpayer if you even pay sales tax. And we want to go back to the principle that says you're better off being in a community than by yourself. So, taxes are our way of being a part of a community and pooling our money together to pay for the services that we can all enjoy in a public setting. So, your community could be your school, your church, your family. But when we're talking about taxes specifically, we are either thinking of our city, our county, our state, or our country as our community. And what are the benefits of being a part of those communities? All of the things you see here: roads, libraries, the military, public schools, police and fire departments, and recreation, parks and trails, and things like that. Those are all things that we all get to enjoy because we are a member of this country and pay taxes. Um, I'm going to skip that one and that one. All right, how do you pay taxes? So this will be on the second page. We're going to go over each one of these individually. Income taxes first. So this is what we do in the spring whenever we file for taxes. We file our income taxes. So that's something that typically it comes out of your paycheck, but there are several reasons why it might not come out of your paycheck, or you might not have had enough taken out of your paycheck. And in that case, when it's tax time, you might have to pay more tax, or you could have taken too much out of your paycheck. And that's when you would get a tax refund. So we'll go over taxes a little bit later, income taxes a little bit later, but we're going to just be general right now and writing down what's the difference between earned income, according to income tax standards, and unearned income. So, earned income is anything that you work from or work for. And so you are getting paid by your job, by your employer, by anybody that you are doing work for. Unearned income is income that you're receiving from other sources. So that could be interest on an account, it could be dividends from stocks, it could be government aid, um, an inheritance, anything that you're not actually physically working for, like hourly wages or anything like that. So, income tax is actually taken by the federal government, which means the United States, and also from your state. So, at tax time, we file two separate forms. We file our federal income taxes and we file our state income taxes. Federal income tax is based on how much income you make. And so, the more your income, the more taxes you'll pay. And most of the people in the US are going to be paying federal income taxes. This money goes to pay for the operations of the federal government and then other government programs, including education, defense of the nation, like the military, and disaster relief. State income tax is also dependent on how much you make, so more money, more taxes. But there are some states that don't have income taxes. You can guarantee that they're going to get your money one way or another. So those states maybe have higher property taxes or they have higher sales taxes to compensate and make sure that they can still have enough money to cover all of the costs that that state is going to incur. And some examples of that are the state highways and the operations of the state government. And now we'll talk about payroll tax, which sounds like income tax, but this only comes if you are working. So no unearned income here, only earned income. So anybody who has a paycheck, you're going to see these things coming out of it. It might say Security and Medicare, but most likely it's going to say FICA, and that encompasses Social Security and Medicare. These are deducted out of your paycheck at a certain percentage, and these are going to specifically go to fund the Social Security program and the Medicare program. So, some reasons why people might receive Social Security money are if they are retired, which is generally over the age of 65, but there are ways to get it when you're younger. If they have a profound disability and therefore cannot work, they can receive Social Security for that. Children who have lost a parent, and those are called survivors benefits, and also a person who loses a spouse when they have children to support. So, pretty much any situation where you are unable to work for your own income, or you lose a significant amount of income by the death of that spouse or parent, and just need help making ends meet. Those are the main reasons why you would receive Social Security. Medicare, on the other hand, is just a health care program for senior citizens. You qualify for that whenever you turn age 65. Now, if you are working for an employer and you're not self-employed, then you are contributing half of your FICA tax, and your employer is contributing the other half. So together, you're contributing the full amount that goes to pay for Social Security and Medicare. Now, if you are self-employed, that means that you are paying both contributions. So that's one reason why it costs more money to be self-employed. So, what's the differences between income tax and payroll tax? One of the things I mentioned already is that income tax is for earned and unearned income, and payroll tax only think of it as it comes from your paycheck. Only if you get a paycheck, and if you don't get a paycheck, you don't pay payroll tax. The amounts differ and the percentages differ, but in general, you could assume that the more money you make, the more taxes you're going to pay in both of these areas. And they both go to fund different things. So, specifically, payroll tax is funding Social Security and Medicare, but the income tax from your state and federal government are going um, to other expenses. Property taxes next. Next page. Property tax is a tax on property. So that's land, buildings, your home, motor vehicles, which can include, of course, vehicles, but also boats, ATVs, motorcycles, things like that. Normally, you're going to pay those automobile taxes whenever you get your car licensed, and that's usually once every year or 2 years. But the property taxes for your home are generally paid at the end of the year. Some places split it up and have you pay twice a year, but that is determined by the value of your land or property or home. So, anytime you've seen the assessor's office car in your driveway, or they come to your house, sometimes they ask to take pictures around your yard. They're looking for improvements that have been made or anything like that that would change the value of your home, because your taxes, your property taxes, are based on the value of your home. And that's why places like Springfield, certain nicer neighborhoods in Springfield, they have such nice schools. Waynesville has such a nice school, is because schools get most of their funding from property taxes from that area. And so anywhere you go where there's really nice homes, they're going to have a really nice school. And that's why Salem schools is not quite as nice, because in general, our homes are not quite as nice as some of those other areas. Sales tax. This is taxes on purchased goods and services, things that you buy. So every time you go to Walmart, to McDonald's, anywhere, you're paying sales tax. If the item was a dollar, you might pay $1.06 if the sales tax is 6%. Now, we do pay two different types of taxes in Salem. We pay our city tax and we pay state tax. And some places don't have city tax, and some places don't have state tax. But again, they're getting your money somewhere. And these go to pay expenses of state and local governments. Excise tax is the last one. This one is something that you don't even see because it's embedded into the price of the item. Gas is a really, really common one. So whenever you go to the gas tank, it doesn't say that you're paying $1.40 plus tax. The price on the machine is the price that you pay. Cigarettes, alcohol, and sometimes other travel expenses are going to be priced the same way. So those are going to pay for state and local government expenses. So anybody who buys those things has to pay those taxes. If you don't buy those things, you don't have to pay those taxes. Tax rates are determined in general by public representatives. So they are placing votes to increase or decrease taxes based on the people that they represent. So if taxpayers have voted in a public representative, chances are they agree with that person's stance on taxes, and therefore that person is going to try to represent their pool of voters by voting the way that their constituents want them to vote. Really doesn't have to do with us or the businesses or even the governments themselves. It's the representatives. And the last question on your worksheet says, why do you think understanding taxes is an important part of money management? And that just says it means that you're going to be earning money and spending money and paying taxes in both instances. And so it's a good idea to learn about them, understand what they go to pay for, so that you can just be a good money manager in general. And that is it for today.